So the question everybody has is that if inflation is going to remain high, what should you invest in? And that's a big question because it's not as if inflation is transitory. They told us it was, but it's certainly not. So I wrote down a few things that I think people should know. I'm going to start with the basics and what you would consider sort of the traditional look, and then I want to look at some others as well. The real rate of inflation is likely higher than what the government or the Fed is going to tell you. Regardless of the official number, though, we have to do our best to keep up with it and hopefully beat it if possible. As Warren Buffett said, rule number one is do not lose money. This is the rule that almost all retail investors break. So we need to learn about risk parity. Risk parity is what Ray Dalio talks about. To weather the storm, we need assets that provide cash flow regardless of the economic conditions. Now, that doesn't mean you only invest in cash flow, but that means some of your assets provide cash flow so that when everything is dipping down, you're still making some income, so you're making progress. So not everything is going down. Most people's portfolio get absolutely crushed during tough times and then they have to make it back. And we know how hard it can be to make it back. Think about it. If your investment went down by 50%, it doesn't have to go up by 50% to get back to where it was. It has to go up by 100%. And that doesn't even factor in inflation. And that's what we're dealing with right now. So trying to make back what you had before, assuming it can get back there, we don't ever know if things will get back to the previous high. You got to be able to make money during those tough times, okay? What I'll discuss are just some options that investors are looking at right now. And I just wanted to bring you everything. Like I said, the traditional is not something that you may be interested in, but I think you should pay attention regardless. More money has moved into money market funds, which are essentially cash. The idea is that not making any profit is better than losing money. It also provides easy access to capital when you're ready to deploy. This generally shouldn't be a large percentage of the total capital invested at any given time, as we know you're already losing to inflation. So you got to think about that for a second here. You're going to have part of your portfolio that's simply ready to go. Dry powder, they may call it. And you're always going to have that ready because at any moment you want to send some cash out there. You want to buy some of this or that. And you don't want to have to sell one asset at a certain time. Maybe there's a delay. Maybe there are problems. Maybe that asset had dropped in value too much. You want to have something ready to go. And also, not losing any money is better than losing 20%, 30, 40, 50 and some other assets. So keep that in mind. I bonds. These are interesting because they can offer a high rate of interest, and at the same time, at this time of this recording here, they're giving 6.89% on a government guaranteed investment. 6.89%, I mean, that's not bad. The only fine print here is that there's a maximum of $10,000. So they limit how much you can invest in it, but for a $10,000 investment, returning you 6.89%, which was much higher before, if anybody got in on that, when I did the video about it previously. 6.89% certainly in today's day and age is okay, all right? Short-dated treasuries have been looking much more attractive recently. In the case of the 6-month US treasuries at the time of this recording are at nearly 5.1%. And I want to make something clear. I'm not talking about ETFs based on bonds. That's not what I'm talking about. I'm buying you actually buy a treasury, okay? Reinvesting every 6 months and assuming that inflation remains high could be beneficial. So you're going to take that 5.1%, the whole capital, roll it back up, invest it back in. And that basically compounds over a period of time. Who knows how long inflation will remain high, and maybe those rates will continue to rise. The last time we saw rates at this level was 2007. We all know what happened there. Gold and precious metals do not provide cash flow, but are valuable in times of inflation over long periods of time. When you look at this, they should not be ignored entirely as most of the mainstream would. They simply ignore that. They don't want to touch it. The only time they become valuable to the mainstream investor is when all hell breaks loose. And then suddenly everybody rushes to get into the gold and the silvers. Okay? Real estate can be a way to produce cash flow even as inflation takes hold and the asset value declines. Always remember to factor in all 4 ways that real estate makes money which includes depreciation. This is what I talked about in my first book. To anybody that's read that, you know about this. This is a phantom loss on a property that effectively puts money in your pocket. If the asset was purchased properly and is cash flowing, it can provide income that outpaces inflation. Make sure to buy in a landlord-friendly area only, okay? You don't want to be in some place where they don't have to pay, and as a result, you're not going to make that cash flow. You don't want to sell the asset. Maybe it's depreciated at that time. So be careful about that. So there's a lot of factors there, just a couple points that you could definitely outpace just with the cash flow. A lot of that is based on debt as well. If you were borrowing at, let's say, 3% and your cash flow is, let's say, 10%, well, the spread in between the two is your income. And that's based on debt. Okay, very important stuff. If it was me, though, I would invest primarily in different businesses, especially e-commerce. There's no better way to have all the benefits of an income-producing asset, tax advantages, scalability, and geographical diversification. These things here are generally not talked about. You don't hear people say, invest in an e-commerce business. No, they say start an e-commerce business, start a side hustle, but they don't think of it as an investment. Well, that's what I do. I'm actually planning on re-recording the entire Amazon GPS course that I did. I'm going to make it the best thing you've ever seen out there. To anybody who had gotten in on that, thank you for doing so, but I'm going to re-record it, make it the best, latest and greatest stuff because it's helped me along my journey since 2017 in e-commerce. And I realized that this is something that people don't know about, but they should be getting wise to it, okay? Because it's going to be something that would help them out. These are different ways that you can hopefully mitigate the effects of inflation. When we talk about, your portfolio and so on, there are many others. I will do more videos about this. Let me know what you think about this type of video. More to come. Don't forget to share this video with somebody you know. Take care.